Hello everybody, welcome back for another video. Hope you're all having a great day and that you are all doing well. To start things off, Malta-based major cryptocurrency exchange OKEx has listed XRP and Bitcoin Cash on its customer-to-customer C2C trading platform. According to a press release shared with Cointelegraph, this happened yesterday. OKEx, the top third crypto trading market by daily volume at press time, now allows users to buy or sell XRP and Bitcoin Cash with 5 supported currencies. They are the British pound, the Chinese renminbi, the Vietnamese dong, the Russian ruble, and the Thai baht on the OKEx C2C trading platform. The Thai baht was added to the OKEx C2C platform in mid-February. During the newest upgrade, all services on the OKEx C2C platform will remain as normal, thank goodness. The announcement states, the platform allows users to place orders with self-selected exchange rates and payment method, purchasing or selling crypto from other users using fiat with 0 transaction fees. The new listings are added to already supporting, they already have, of course, Bitcoin, Tether, Ethereum, and Litecoin, the 5th top cryptocurrency by market cap at press time. At the same time, OKEx has announced the delisting of 3 cryptocurrencies. They said on the 25th of February, OKEx will stop supporting Neo, Quantum, and Exchange Union. This is not the first time, and it will not be the last time that we are hearing about coin delistings. I have a strange, or rather, I mean, at this point, it's fairly obvious, at least to me, that a lot of cryptocurrency exchanges are kind of, I want to say, shaving off the extra weight. That sounds a bit crude, but I'm pretty sure you understand exactly what I'm talking about. There are a lot of cryptocurrency projects and cryptocurrency coins that people told me to talk about in 2018, and I kindly told everyone out there that a lot of these coins are probably not going to make it. They are not going to make it. I can definitely tell you that right now. Very few coins are going to make it, and this is once again not the first time that we have heard that Neo and Quantum, or Qtum, depending on how you want to say it, are being delisted. I have also never ever heard of Exchange Union, and I'm pretty sure after this I will not be hearing about it either. It's about time that they added XRP and even more so even Bitcoin Cash to their platform. I understand sometimes while certain platforms are a bit more reserved when it comes to adding XRP, I understand the discussions behind it. Get it, got it, good. What's interesting here is that the coins that they now have on their platform are pretty much the coins that I personally think are going to make it, especially with OKEx being a major cryptocurrency exchange. Bitcoin, not Tether, what have you. It's a, swapping coin. Ethereum, Litecoin, XRP, and Bitcoin Cash are probably going to be, maybe, could be some of the largest names in the cryptocurrency space. So I don't think it's a mistake that they added these coins. But once again, please pay attention to where you have your money in the cryptocurrency space, because when we do eventually have a bull run and prices are going up, every coin looks like a good buy because everything is going back up. But pay attention to where you have your money, because when we do fall back down and have another bear market, as we always do, certain coins will definitely crumble into dust, while the larger players in the game will probably continue living on and walking off into the sunset. But yeah, let's move on. Just thought I'd quickly-ish breeze over this one. John McAfee is a rather controversial figure in the cryptocurrency space. It says in late 2017, when Bitcoin was surpassing key levels each and every day, we reported that technology guru John McAfee made a prediction that Bitcoin would hit $1 million by the end of 2020. It says he also put his manhood on the line, which he did. So the purpose of this is that he predicted that Bitcoin would hit $500,000 by the end of 2020. He said this was based off of a prediction that Bitcoin was at 5,000 by the end of 2017. We ended up hitting 20,000. So he said, therefore, he believed that Bitcoin is going to hit $1 million by the end of 2020. I guess the most significant part is that he has the most bullish prediction that we have, at least at the time of 2-year period, but he's actually given an exact date before. It was just the end of 2020. Now he's saying that he is sure that by December 31st, 2020, it is going to hit $1 million. If not, he's going to be doing something that he probably should not be doing, but it would make for a good YouTube video. Anyway, the point is, I can't disagree with him, because I'm pretty certain at some point Bitcoin is going to hit that number. Do I think it's going to happen at the end of 2020? I am going to probably say no. And it would, how sad would it be if if at the last day of 2020 the price is around 999,000, like 800, and it doesn't, and then the day after it actually hits $1 million. I'd be pretty sad for him, but at least he would have been correct in some sort of way. Anyway, yeah, let's like I said, breeze over this one. A lot of people are now making their hyper predictions because they're pretty certain they kind of see what's going on in the cryptocurrency space and exactly where this entire industry is moving. But John McAfee has now given us a proper day. I know so many people, I read the comment section, so many people do not like John McAfee. He's a bit out there. I mean, everyone has their thing. No one's perfect. But if you read some of the stuff that he's done, it's a little special. Anyway, let's move on. Next up, Fidelity Digital, the digital assets arm of Fidelity Investments, has become the first financial institution to receive the so-called Bitcoin payments torch that is being relayed from user to user around the globe via Bitcoin's Lightning Network. With more than, pay attention, 27 million customers, Fidelity manages $7.2 trillion in total assets. It's the US leader in 401k retirement savings plans and is one of the largest 403b retirement plan providers for non-profit institutions. The investment giant announced it had received the Lightning Network torch on Friday from Tokyo-based and self-proclaimed Bitcoin maximalist who's interested in mining and trading Twitter user Wiz, who received it from Bitcoin entrepreneur Charlie Shrem. He said, So someone said, who wants to be the next torchbearer? This was said by Wiz. The reply with a Lightning invoice for 3.64 million Satoshis, and I'll choose who I deem to be the most trustworthy. The 3.64 million Satoshi quote to go was about $142. Fidelity Assets apparently came forward and said, we and our research team at the Fidelity Center from Applied Technology have received the Lightning torch from Wiz. Here's the actual tweet for it. Who should we pass it on to? Hashtag Lightning Trust Chain Fidelity Ads, which is expected to launch its Bitcoin custody service next month. Fidelity is enormous. They're a very large institution, if you kind of want to say that. I mean, when you talk about normal institutions who are in the financial world, they typically, they'll have about 10 billion, 15 billion, maybe 110 billion dollars in that they manage. Huge number. I mean, it's more than a couple million, so it's fairly gigantic. When you talk about Fidelity and they have $7.2 trillion, that's worth more than most countries. Like you can find at least 15 countries on this planet, cluster them together, and they still will not be worth $7.2 trillion. And the fact that Fidelity has announced that they're getting into the cryptocurrency space, when I talk about the longevity that we're going to have in the cryptocurrency space, it comes down to news stories like this. And like, it's not even like it's like a, what's the word? Like speculation. Like no one's like, oh, maybe Fidelity will get into it. We know they are. They've announced that they are going to have their own cryptocurrency platforms and stuff like that. So it's kind of interesting that, this is where I question certain things. The cryptocurrency space is meant to be anti-establishment, anti-bank, anti-institution, anti-everything. This is the point of cryptocurrencies. But when we have people like when we have institutions like Fidelity kind of coming forward and say, yeah, we'll grab the torch, and everyone kind of hands it to them, it's not hypocrisy, it's just humanity. And I mean that as far as you can find any, I don't know if you've ever heard the term "everyone has a price." It's pretty true. a lot of the people, and this is just my opinion, I mean, it's a mathematical opinion, and it'll be kind of clear when Bitcoin hits around $100,000 or $1 million. A lot of the people who got into Bitcoin very early and have a huge amount of Bitcoin, regardless of how much of a maximalist or a Bitcoin extremist, as Charlie Lee calls them, or a Bitcoin hopeful, whatever you kind of want to call them, that they may be for a decentralized world, when someone dangles couple $1 trillion in front of your face, you kind of take notice, like I said, regardless of how pure or kind of heart you might be. I'm pretty sure you see where I'm going with this, because I've been screamed at before when I mention a bank or an institution who's getting into the cryptocurrency space, and then Fidelity kind of gets into it and everyone is kind of like cheering. You see where I'm getting at. Anyway, I guess to end this on a good point, so it's not ending negative. I do like that the lightning torch is constantly being passed around. It's headed right around here. Yeah, Fidelity becomes the 229th torch bearer. That's an enormous amount. I'm glad that this is spreading around quickly. I'm glad that everyone is kind of catching on to this, and I know that it's going to continue, but I'm interested. I mean, for me, I won't lie, I like decentralization, but I am also here for the money. So I do like that we have major institutions who are giving a bit of, I hate the word validity to it, but you kind of get what I'm aiming at, as far as like if someone on Twitter or any other major financial institution sees that the people from Fidelity are into Bitcoin and also are using something called the Lightning Network, which also then leads me to believe, like I said before a couple months ago, I'm pretty sure that all of these major players are betting as well on the Lightning Network, and this is why we're seeing every single week a huge explosion of the number of Lightning Network nodes and channels that are out there. I'm pretty sure they're being opened by, allegedly, I don't know, can't say for sure, Fidelity, New York Stock Exchange, and the NASDAQ, because the numbers are rising far too fast. Like, we had no interest until Backed was supposed to have launched last year. So I can only assume that over the next, I mean, probably forever at this point, but over the last couple of months and weeks, it's been major institutions who have been opening up thousands of payment channels because they're trying to make sure that everything is working. And I mean, it's not, random or haphazard that Fidelity decided to take the Lightning Network torch. They're clearly into it in some sort of way, and I'm pretty sure, like I said, you can't have a bull run of Bitcoin going up to $1 million and having 395,000 backed up transactions on the blockchain. That's not how this is going to work. But anyway, let's move on. Next up, this is incredibly valid always. The author of two widely acclaimed books on cryptocurrency, offered advice to developers building Ethereum, the world's second largest blockchain, this week in arguing they should be careful to avoid fragmenting their technical community through infighting. Andreas Antonopoulos, whose books Mastering Bitcoin and Mastering Ethereum are now standards for developers learning both protocols, gave a keynote address about the importance of building unstoppable code to hackers and enthusiasts at ETH Denver, a conference that drew thousands to Colorado to discuss the future of the protocol. He said, "Don't give yourself the power to stop unstoppable code. Embrace the fact that what we're doing is important and it requires courage." He added later in the interview with CoinDesk a word of caution to the Ethereum community by saying, he said, "Be careful of fragmentation. When things get difficult, people become more insular in their thinking and they start magnifying differences instead of focusing on commonalities," end quote. This has to do not only with the Ethereum team, but the Bitcoin team. Anyone who is into cryptocurrencies, and especially anyone listening to this video, this goes to me and to all of you equally. We have to understand that what we're doing is incredibly important. Even just you listening to this video, even just you sharing this video, even just you doing your own research and figuring out and understanding what cryptocurrencies are, we play a major role in all of the evolution of the entire space, of the learning of it, of developing code, of buying the cryptocurrencies, of adding the transactions onto the blockchain. And when we fight amongst ourselves, we get nowhere. And part of the problem that's developing right now, or rather that's been developing for quite a long amount of time, and I can see it happening again, and it's kind of annoying me, is that as prices have continued to edge their way up ever so slightly, people in the cryptocurrency space are now becoming even more tribal, if you can believe it, than they were before, even just a couple of months ago as prices were going down. Regardless of what coins you hold, regardless of what coins you have, regardless of what coins or tokens or cryptocurrencies or crypto assets that you may love or have the most of, try to be open to, I want to say new ideas, but just be friendly to everyone. When Bitcoin's $1 million and we've won the war, you can be as mean and as cruel as you want, but the point is what's happening, the reason he said this, for those who really haven't been paying attention, in the Ethereum community, this is why I said I think it's very weird that we get these kinds of topics and this information as we get closer to very important things in the cryptocurrency space. When Bitcoin was first getting SegWit, something that was going to allow Bitcoin to have faster transactions and make, air quotes, Bitcoin better than it formerly was, people in the community started arguing, saying this wasn't needed, this wasn't necessary, and then eventually Bitcoin Cash was birthed, and then we had Bitcoin Gold, and now we have Bitcoin Cash, Satoshi's vision. And what's happening is that in the Ethereum space, because we are very, very, very close to Constantinople, people are now saying that we don't need Constantinople, that Constantinople is flawed, the same exact thing that they said when we were getting SegWit. And now they're talking about, like I said, in small circles, but this talk should not be happening, that they're thinking about forking Ethereum to try and figure out a way to create another new coin, even though there's the, what's it called? Is it the Ice Age, where the other chain is going to be frozen? People are just trying to find the cash grab. That's kind of the nicest way of, really the nicest way of saying it. People are saying that they have a problem with something, but what ends up happening is that other people who don't realize that they're going for a cash grab, like with Bitcoin Cash and Satoshi's vision, start to believe in the rhetoric that these other people are saying. Keep in mind and never ever forget, there is only one Ethereum, there is only one Bitcoin, there is only one Litecoin, there is only one XRP. Any other coin that comes from these are not the original coin, as they are, semantics aside, regardless of what you might say. It's very difficult because everyone has their own ideas of how the world works. Everyone has their own mantra. Everyone has their own thing, but try, and I really mean it, try to keep the fighting to a minimum, because if we fight amongst ourselves, it becomes incredibly easy for anyone who's trying to destroy crypto to completely fragment the rest of the community, create thousands of other forks, and then the cryptocurrency space ends up looking like a joke. So it's going to continue happening, but try to be a bit more understanding. Don't talk about each other's mothers or other people's families. Some of the comments I see are completely out of control. Remember, these are digital assets. These are cryptocurrencies. Try not to get too personal and realize that regardless of what coin we might all be in, we all have the same goal at the end of the day. That is a more decentralized, a fairer world, and to make money. And when you mess with someone else's money, you may not realize it. You cause a ripple effect and you mess with your own money. I'm looking at you, Bitcoin Cash and Bitcoin Cash, Satoshi's vision. But yeah, let's move on. I love news like this, simply because it's news that's constantly passed over by other people. I don't think that they understand the significance of stories like this, but I do, so this is why I talk about them, to try and give you a bit more insight exactly into how, especially if crypto is kind of like your first foray into the financial world, stories like this allow you to understand at least a bit more how deep the money well goes. Typically on the surface, you kind of see, like if you're watching news stories and stuff like that, you'll see, this institution did this, or, Fidelity or so and so. And so a lot of people don't realize how much money actually flows through universities and schools and endowments and all these other things, because at the end of the day, it is usually all about the money. The University of Michigan's $12 billion endowment plans to bolster its investment in a crypto network technology fund, or CNK Fund 1, managed by American venture capitalist firm Andreessen Horowitz. The development was released in the agenda for the university's Board of Regents on the 21st of February. According to the document, the endowment has already committed $3 million pay attention, to C&K Fund 1 in June 2018 and has now included it as an approved partnership for a follow-on investment. Amount is unspecified. The agenda states that the fund, created by Menlo Park, CA headquartered Andreessen Horowitz, invests in crypto network technology companies across the spectrum of seed, venture, and growth stage opportunities. The document outlines the rationale behind backing the Andreessen Horowitz dedicated crypto fund, noting that crypto has become an important area of innovation and entrepreneurship that warrants focused attention, and that is regarded as a distinct type of technology by entrepreneurs, funding sources, and developers. As previously reported, several high-profile, prestigious university endowments have started to back crypto-focused funds. In October 2017, Ivy League school known as Yale, which has the second largest endowment in the U.S., was revealed to be one of the investors that helped to raise $400 million for a major new crypto-focused fund created by veterans from Coinbase and stalwart crypto fund Pantera Capital. That same month, it was reported that fellow Ivy League titan Harvard, whose $39.2 billion endowment for the 2018 fiscal year was the largest of any university endowment globally, had invested capital into at least one cryptocurrency fund. The report made the same claim for four prestigious U.S. schools: Stanford University, Dartmouth College, the Massachusetts Institute of Technology, or MIT, and the University of North Carolina. When you talk about institutional investors, it's not people who live on Fifth Avenue, who live on Wall Street, who work in so-and-so yachts. It's schools. And what's interesting about schools is, if you have ever been into the traditional financial world, this is why I said if you are new to the financial space in general and crypto is your first time in the pool, what makes headline news sometimes for finance, and this is why it's very interesting, is that a lot of these schools, when they figure out, a lot of them actually invest in a lot of like retirement funds. They invest in a lot of hedge funds, and hedge funds are like the multi-billion-dollar funds that the people on the yachts actually end up having, the Wall Street bankers. They invest in these things because they end up making more money. The schools cost money. Like, these schools look like kingdoms, and they own. You may have noticed, especially if you've ever been to the U.S. If you've never been to the U.S., I'll tell you, the universities in the U.S. look like small towns and small kingdoms. That's because the universities, every single year that they get more money, they actually buy up more and more land and more houses. They pretty much become their own little cities. They invest in so many things on the side that pretty much make them richer, and a lot of people don't really know that it's an easily found secret in the financial world that universities do this. And the fact that they have gotten into cryptocurrencies, when I tell you, unless the internet dies and someone finds a major plug and unplugs it, and we lose all the internet in the world, crypto's not going anywhere. These people are throwing millions of dollars into things made by Coinbase and other names that and these are just the universities that we know about. Typically, there's a huge domino effect. When the major domino, the first gigantic domino falls, all the other smaller ones fall by the wind of the other one falling, because they're so desperate to make sure that they get a piece of the pie before anyone else does. If these are the major names who are getting into the cryptocurrency space, you'd better believe small universities in the US are probably throwing, if they can, even $500,000 to maybe $1 million into these funds to be able to buy up these cryptocurrency funds. The point is, when you talk about big money getting into it, like I said, it's not just guys in suits and stuff like that. It's universities. And the next step, and we had news about this a couple of days ago, and this is the part that I'm most excited about, it's retirement funds. Retirement funds do not invest in anything that they do not see lasting for a very long time. You invest in retirement funds when you are 20 and 30 years old because you want to retire at the age of 65. And the money that these funds put your money into are Apple, Amazon, very long-term things that know that they're probably not going to die anytime soon. Pharmaceuticals, things, humans will continue to get sick. They invest in these things. And the fact that we are now seeing retirement funds investing in cryptocurrency funds that hold Bitcoin, Ethereum, and XRP, that means that they have done the research. And I mean heavy research. Like, they have huge teams of lawyers and everyone else and analysts focusing on all these things. And they see a future that cryptocurrencies are going to at least last for another 20 to 30 years, not 2 years, not 5 years, not even 15 years. These are very long-term holds for the people who are investing in these things, who want to retire over the next 20 to 30 years. Pay attention to where this is going. Once again, if you have any doubts about where crypto is going, even if you had if you had no other way to figure out information, if you thought that crypto was going anywhere, just read this. Not even Fidelity, not even the New York Stock Exchange, nothing else. Getting into the space, and I don't care for Coinbase, but if you look at who they're partnered with and the money that is being thrown at Coinbase, crypto's not going anywhere anytime soon. And these people are expecting to make trillions of dollars. We are leaving, I know it sounds weird, we are leaving the billionaire game. We are going to see the world's first trillionaires in a couple of years, and they're going to be from the cryptocurrency space. And when that happens, if you think this is good news, just wait until everyone around the world tries to start throwing their money into crypto as a form of retirement. And that means average Joes throwing as much money as they can into the crypto market because they hear on the television the world's first trillionaire made his money by investing in Bitcoin early, by investing in XRP early. This person got into Ethereum very early, and et cetera, et cetera. And when that happens, when the normal money starts getting into the market, after Bitcoin is already $250,000, it's going to be fun. That's kind of the nicest way of saying it. Like really, really fun. I can't stress that enough. Okay, let's move on. To kind of finish things off, the Goldman Sachs funded crypto custodial service known as BitGo has joined the Universal Protocol Alliance. It was announced yesterday. The Universal Protocol Alliance is a group of companies promoting the Universal Protocol platform that enables interoperability across blockchains. One problem in the cryptocurrency economy is the walled gardens of the different coins on blockchains. One cannot use Bitcoin directly on the Ethereum blockchain. For an example, the Universal Protocol platform enables these tokens to exist on the same platform in the form of universal tokens. Without going too deep into this, it's not really, it's not that it's not that interesting, is that people are trying to, there's something called atomic swaps, where people can pretty much swap between coins rather easily. People are trying to figure out other ways of doing this, and this is why it says they, where is it? They created a like Bitcoin Up platform, Universal Bitcoin. They also launched stable coins in Universal Dollar, Universal Euro. They're trying to figure out ways to be able to essentially swap. There was like a what's it called? Like an echo in my last video. I'm hoping it's not happening again. I just hit the microphone cord and I shuddered a bit lest my voice be echoey, which I can't even hear, which is kind of weird. Like, you would assume I have headphones on as well. You would assume that I'd be able to hear the echo. Anyway, the point is, this is happening, and it's not the greatest thing in the entire world, but everyone is desperately trying to figure out a way to be able to swap between coins rather quickly, because everyone is trying to figure out a way to swap between coins rather quickly. I don't know how to really segue from that. Anyway, though it is the weekend, the market is actually doing pretty okay. Bitcoin has popped up a tiny bit, around $135, give or take. It's now at, for those who are not looking at the screen and are driving, it is at $4,129 at the moment of me saying that. The market is doing okay. Ethereum is up by 5%. We typically don't see this. I said it a couple days ago. I said I would have liked to have seen a Bitcoin price of 4,200 by the end of the week. We're getting kind of close. As of right now, when you read around, people are saying, the analysts say, that Bitcoin's price, if Bitcoin's price goes past $5,000, it will signal a trend reversal, which means that we are on the cusp, or maybe even at the very beginning, of what is known as a bull market, a bull run, because of numbers, fundamentals, and all that jazz. I'm just happy to see Bitcoin in the green, that Bitcoin is actually up. I hope this continues. It would be nice. I was going to be a bit more optimistic and say by the end of this month to have a $5,000 Bitcoin. Only a couple days left. Would be nice. I will not lie. Alrighty, everybody. That is definitely going to do it for this video. I hope you all enjoyed. I hope you all are having a great day, a great morning, a great afternoon, a great evening, wherever you are, wherever you might be. I hope it's absolutely fantastic. Thank you all once again for watching and listening. I hope you enjoyed. As always, a very special thank you to my Patreon supporters. They are Jared Schneider, Jim Gardner, singer, songwriter Mike Savitz, Nick Kanaya, Anthony Charles, Yasha Harari, Gordon Nikic, Travis Haynes, Nick Mangialavori, Professor Wally from Gunbot University, Arthur Yaku, L. Doug, Brady Nields, Rai, Gil Boa Snake, and Vlad the Impaler. Thank you all an incredible amount for your generosity. I do appreciate it. Thank you all very, very much once again. And yeah, I'll talk to you all soon. See you.